the U.S. Factory output surged by 8.2% in April, the biggest increase in more than 3 years. This was a sign of a strong recovery in the manufacturing sector after the pandemic recession. But what were the main factors behind this impressive growth? One factor was the strong domestic demand for goods. As the economy reopened and consumers received stimulus checks, they shifted their spending from services to goods. This boosted the demand for products such as cars, furniture, appliances, and electronics. Many of these products are made in U.S. factories or require U.S. components. Another factor was the recovering exports of U.S. goods to foreign markets. As global trade resumed and some countries eased their lockdowns, U.S. manufacturers saw an increase in orders from abroad. This was especially true for sectors such as pharmaceuticals, chemicals, and machinery, which have a competitive edge in the global market. A third factor was the public investments in infrastructure projects. The federal government and some states increased their spending on roads, bridges, railways, and other public works. This created more demand for materials such as steel, cement, and asphalt, as well as equipment such as cranes and bulldozers. These are mostly produced by U.S. factories. These three factors combined to create a surge in U.S. factory output in April, showing that the manufacturing sector is bouncing back from the pandemic shock. However, there are also some challenges and risks ahead, such as supply chain disruptions, labor shortages, and rising inflation pressures. One of the factors that contributed to the surge in factory output in April was the easing inflation trend and the downward correction in long-term interest rates. These helped reduce the input costs and borrowing costs of local manufacturers, boosting their profitability and competitiveness. According to Statistics Korea, the Consumer Price Index in South Korea increased 3.3% in May 2023 from a year ago, easing for a fourth consecutive month. It was the lowest figure since October 2021, supporting the market's perception that the central bank's policy tightening cycle is over. The core inflation rate, which excludes energy and food prices, also moderated to 4.32% in May from 4.61% in April, marking the lowest since November. This suggests that the inflationary pressures from the supply-side shocks caused by the pandemic and global commodity prices have started to ease. Meanwhile, the yield on the benchmark 10-year Treasury bonds fell to 3.426% in June from 3.5% in April, reflecting the lower inflation expectations and the pause in monetary policy tightening. The Bank of Korea lifted its policy rate by an aggregate of 3 percentage points from August 2021 to combat inflation, but stopped raising rates in February this year. The lower inflation and interest rates helped lower the production costs and financing costs for manufacturers, especially those in capital-intensive industries such as machinery, electronics, and chemicals. According to Statistics Korea, the Producer Price Index for manufacturing fell 0.2% in April from March, while the Industrial Production Index rose 1.2%. The lower costs also enhanced the price competitiveness of Korean exporters in the global market, as they could offer more attractive prices to their customers. According to the Ministry of Trade, Industry, and Energy, exports rose 41.1% year-on-year in April, led by strong demand for semiconductors, automobiles, and petrochemicals. Therefore, we can see that the easing inflation trend and the downward correction in long-term interest rates helped reduce the input costs and borrowing costs of local manufacturers, which boosted their output and exports in April.